All right, welcome everyone. We'll get started. It looks like we have a good group on the line, about 20 attendees so far, and we may have additional folks dialing in. So welcome to today's Intentional Endowments Network webinar. I'm Hannah Bowen. I'm going to be moderating. I'm the new network manager at IEN and thrilled to be hosting a webinar as part of our learning series for our members and the broader IEN network. So if everyone is logged in and can see the screen, we have a great lineup today talking about the Future Fit Business Benchmark as a framework for thinking about long-term sustainability and a kind of different way of thinking about this work. So we'll be hearing from Geoff Kendall, who's the co-founder and CEO of the Future Fit Foundation, who will speak to the broader framework and how you can think about long-term sustainability, the role of business, and the role as an investor. And then we'll hear from an investor perspective directly. So Chris Birch with the Danish pension fund LD Pensions will be talking about how they're using this framework in real life. And again, I'm Hannah Bowen with the Intentional Endowments Network. So I'll just run through a very quick overview of why we're here and who we are, and then we'll dig right into the conversation. A couple of logistics for the webinar. You should see a chat box in your GoToWebinar settings there, and you can add questions throughout the webinar. When we get to the end of these initial conversation starter presentations, we should have 20 minutes or more to go into discussion. So add your questions into that chat box there, and I'll be collecting them to moderate the question session. And everyone should be on mute except for our panelists, but we will use that chat box. So if you have any questions or any challenges during the webinar, just let us know. So for those of you who are new to the network, just a couple of refreshers or overviews on, and I seem to be losing some of our audio here. No, all right. So refresher on the Intentional Endowments Network, who we are and what we do. So as a pure learning network for higher ed, philanthropic, and nonprofit endowments, we're really trying to bring people together to exchange ideas, to lead the field and build the field of sustainable and mission-aligned investing for endowments. And we use peer networking, forums, face-to-face meetings, training and webinars and educational opportunities like this one to advance the field. So I know we have on the line some representatives from each of these groups, from endowments themselves, from the investment firms and other institutional investors that they work with, from associations, networks, and nonprofit and advocacy groups. So assuming that the questions that come in will reflect all of those perspectives, and that's how we're building this field together. Couple of things that the Intentional Endowments Network has released in the last few months that may be of interest and also help frame this conversation. The first is the Intentionally Designed Endowment Roadmap, which really just lays out kind of the steps along the way or what the process looks like for most endowments. And you'll see it's a bit cyclical, and that's because for all endowments, it's a constant ongoing process to think about what is possible to build consensus around the goals. When we say intentionally designed to do what, designed to achieve what, designed to align with which goals, which values, and the mission of each organization. How that then gets reflected in an investment policy and in investment strategies, again, can prompt new learning, or meeting peers can prompt new learning and send an organization, a group of trustees, a group of administrators back through some of this process. So we're using the roadmap to organize resources as well. You can go onto the Intentionally designed endowment roadmap page at the IEN website to get kind of a living library of resources organized by each of these steps. And, you know, as we think through hearing about the Future Fit business benchmark and hearing how one investor has used that benchmark to guide them through their thinking of investments, think of that in terms of, you know, where are you on the roadmap? Where can this fit in? Is this a useful tool for building consensus, for assessing, aligning, monitoring investments, or even for communicating out to stakeholders how you're thinking about your endowment design? And just to think a little bit more about kind of where this fits in the overall network impact, IEN has also just released its first impact report that really just shows what all of you on the line and peers across institutions are doing and how we're growing as a network and as a movement of investors, and, you know, redefining what sustainable investing looks like for schools. So on the screen is just a brief snapshot of some of the things that have been accomplished together over the last few years, but really I think that's just the basis for a lot of growth. So you can check out the impact report on our website as well, and we'd love to hear from across the network, from those of you on the call, what additional progress you're seeing. So with that, I'm going to hand over to our panelists. And we'll start with Geoff Kendall, who's going to give us the big picture and talk us through the overall framework. And then we'll hand off to Chris from there and then go to questions. So again, as questions strike you throughout the presentation, just add them to the chat box and we will go from there. So Geoff, over to you.
Thank you, Hannah. Can you hear me okay?
Yes, sounds great.
Okay, excellent. Hannah, just a quick point. I noticed that Kristoffer is not showing his audio is working, and he said that he pinged me on the note to say he's tried to call in again. So I don't know if there's anything you can do to check that while I'm speaking. But
yes, I will work on that while you go ahead.
Thank you very much. Okay, well, thanks everyone for dialing in. I'll try and keep this brief. It's probably going to be about 15 minutes just to give you a very overall summary of what we're doing and why and how it might be helpful to you. I'm going to have to say next every time I want Hannah to click, and that includes now. Next, please, Hannah. Perfectly done, thank you. So, Future Fit, we are a registered UK charity, a non-profit. Everything we do is about creating a public good. Okay, so we are in the business of taking the best academic research out there about what the world needs, and then in terms of environmental and social performance, and then figuring out how to turn that into actionable guidance and insight for companies and those who invest in them. And our starting point here is a clear destination to aim for. The Future Fit society is one that protects the possibility that humans and other life can flourish on Earth forever by being environmentally restorative, socially just, and economically inclusive. There's a little bit of background noise. I'm not sure if someone isn't on mute. As long as you can still hear me, that's okay.
Yes,
next
it
slide,
looks
please,
like an echo on your end, but it's coming through all right.
Oh, on my end, okay, good. Okay, yeah, so in a nutshell, this is about changing the information that flows through our market, through the system, to enable better decisions throughout the system. So if you click 3 times, Hannah. So there are really 3 aspects to this. We know what society needs. There's probably work you've heard of around planetary limits. There's sustainable development goals, which I'm sure you're aware of. There's a lot of work out there that tells us what we need to aim for in terms of ensuring we do not go over planetary limits, and that we maintain the social foundations we need for human flourishing. The question is, what does that all mean for a business? So what we've done is we've translated that into what we call the Future Fit Business Benchmark, which I'll talk about, which gives actionable insight to companies to set better goals take better day-to-day decisions in pursuit of those goals, and then ultimately to report on their progress in a way that gives much more consistent, comparable, forward-looking data for investors to act on, so they can really understand the systemic risks and opportunities in their portfolio. Next one, please, Hannah. Next slide, please, Hannah. Oh.
Yep, sorry about that.
That's okay. Okay, I should just point out that we work with a range of institutional investors and global companies. As I say, we're a non-profit. We don't do consulting. We're building an ecosystem of companies, investors, and advisors to all help each other on this journey toward a future fit society. But our development council is specifically a group of companies and investors who are helping us to make sure that the benchmark evolves to be as useful and usable as possible. And really, where we're starting is redefining how we think about business. So it's not that long ago that the primary role of business everyone took to be the creation of shareholder value, where it's actually a good thing for companies to privatize gains and externalize losses, so that the company can make as much profit as possible, no matter what the environmental and social cost. Next one, please, Hannah. More recently, I'm sure you've all heard about the idea of the triple bottom line. It was coined 25 years ago, actually, by one of the people advising the Fit Foundation, John Elkington. The triple bottom line said that business needs to look at three aspects of environmental, social, and economic performance. Unfortunately, the triple bottom line, although that's a great idea, has often been misportrayed or misconstrued as just business overlapping with the environment and society. Interestingly, John Elkington, who came up with the term bottom line, never drew this kind of Venn diagram approach, which makes it look like business is more or less independently from the environment and society. So often, this makes business think that they can still focus on the financials, and where possible, they might have a positive impact around the edges, and that often justifies negative impacts elsewhere. But unfortunately, given the state society is in today and the environmental degradation we're facing, just doing good in some areas to try and offset the bad in others is not. So instead, we need to reconceive this from a systems point of view. Flip, please, Hannah. So thinking not just in terms of shareholder value or shared value, but system value. So this is about getting to the point at which business in no way hinders and ideally contributes to society's progress to environmental restoration, economic inclusivity, and social justice. Okay, so it's still the same triple bottom line. It's just looking at it through a systems lens and realizing that business can only thrive if society flourishes. And society can only flourish if we live within the carrying capacity of our finite planet. Next slide, please, Hannah. So if we want to think in terms of system value, we need a way to measure it. And for that, we need a new kind of business benchmark. So typically, when companies talk about environmental and social performance, they do so in one of three ways. The first is to talk about performance relative to a previous year. So, for example, we've reduced our water use by 10% since 2005. Well, that tells me nothing about where you're going or how much of a business risk that issue is. So the second one, next please, Hannah. The second one is where companies talk about performance relative to each other, relative to their peers within a sector. And of course, everybody needs to know how well they're doing relative to their peers. But if you only look within a sector and look at best practices within that sector, it gives you a very distorted worldview. And unfortunately, this is where all of today's ESG and sustainability ratings sit. So for example, things like the Dow Jones Sustainability Index will score companies on how sustainable they are within a particular sector. And this sends the wrong signals, because you end up with DJSI and other ratings as well saying that oil companies, for example, can be 90% sustainable or are 90% sustainable today, which if you know anything about the kind of urgency of climate change that we face, saying any oil company today whose business model is predicated on digging up more stuff to burn is 90% sustainable is not sending people the right signals. And more investors are starting to understand this. How can a company whose business model is fundamentally challenging be considered 90% sustainable? Is that really capturing the systemic risks in my portfolio? And of course, the answer is no. The third approach, click please, Hannah, is where companies talk about performance relative to the short-term goals which they set themselves. And of course, every journey is a series of steps. Short-term goals are very important. But the question is, how do we know if those short-term goals are taking the company in the right direction? So that's why we need a fourth approach. Next click, please. And this is to understand, where is it we're actually going? How far are we away from the point at which we know the company is causing no harm to people or the planet, its activities and the products it creates? So you can think of this as an extra financial break-even point. If you think about the triple bottom line of people, planet, and profit, the only one where we've really understood what it means to break even is the financial one. You have to make as much money as you spend or you won't be around for long. Now imagine in a sustainable future, we need to be at the point where every company also reaches a social break-even point and an environmental break-even point to ensure it's in no way hindering our collective progress. And that's what Future Fit is all about. It's about defining this extra financial break-even point and making that actionable. Next click, please, Hannah. And one more click. So it all starts with systems science. How do we know what it means to cause no harm? Well, there's some science that's been around for 30 odd years called the Framework for Strategic Sustainable Development, a nice catchy name, which is extremely good peer-reviewed science that has been in well over 100 academic publications and books and so forth. Unfortunately, the academic rigor behind it, which is great, has often been accompanied by academic language, which is the kind of thing you see on this slide, which means that it's actually quite hard for any CEO to think, well, what does this mean for me? So next slide. So what we've done is we've taken this and we've translated this into something that's much more actionable for business. That starts with this, which is a definition of a future fit society in terms of specific issues like energy, natural resources, water, people's well-being, and so on. Next click, please, Hannah. And these are the properties of a future fit society. So we don't know exactly how we're going to get there and what technologies will be required. One, and you can't be prescriptive over this stuff, but we do know that if we get to the point where our economy is economically restorative, socially just, and economically inclusive, we'll be able to say these things about that society. That final one at the bottom there is about changing the system as a whole, about social norms, global governance, the way we think about economic growth, so that the outcomes above around eliminating waste, fulfilling lives, etc., become the default, so that the system actually values those things. So this is a good endpoint for us all to aim for, whether we're governments or cities or companies or households or whatever. The question is, how do we turn this into something that an individual business can assess their progress towards? So that's the next slide. And here we can think of a company's impact on multiple dimensions. Horizontally, direct impact, which is the result of a company's own action, how it procures things, the design of its products and so forth. And indirect impact, which is the impact that it either causes elsewhere in the system or it depends upon elsewhere in the system. So for example, if a company is only bringing its products to market because profitably because its suppliers are paying only $1 a day, well then the company is effectively externalizing the idea of keeping people in poverty. So there are indirect impacts that companies can still be held somewhat accountable for. But then on the vertical dimension, there's negative impacts which move us away from a future fit society and positive ones which move us closer. So that bottom left quadrant is really what every business needs to sort out. Every business must eliminate its own negative impacts. If you click to the next slide, please. You can see that what we've done over the period of 5 years, working with global companies, investors, and academics, is we've translated the underlying system science we talked about before into these 23 break-even goals. So these are 23 goals that every business eventually needs to reach, no matter what its size or sector. Okay. Some will be harder to reach than others, depending what industry the company operates in, depending what kind of products it makes, and so on. But the same goals apply for everyone. Now, how they're prioritized will depend on the particular business model and industry of an individual company. We'll get to that in a little while. But the point is, this gives a destination, a line in the sand for every company to aim for. Next slide, please, Hannah. Now, of course, that is the negative impacts a company can have that it's directly responsible for, and it needs to eliminate all those. But there are many ways a company can actually speed up progress toward future fitness through its actions. So, for example, it can help to reduce the negative impacts of others, whether it's suppliers or customers or whatever. Next click, please, Hannah. In fact, next 2 clicks. It can create a positive impact itself. For example, there are some companies now that are generating more renewable energy than they need themselves and are making the extra available back to the grid for others to use. Or a company might find another organization that is having a positive impact and actually help to amplify those positive impacts. So these are really 3 ways that a company can have a positive impact. But what are the outcomes that take us closer to a future fit society in those orange boxes? Well, that's the next slide. Excellent, thank you, Hannah. So this is the kind of flip side of the break-even goals. The break-even goals are about eliminating negative impacts. Positive pursuits are about providing one coherent, consistent framing for all the positive contributions that companies can make that take us closer towards future fitness. So, for example, by increasing the number of people that have access to energy, or about reclaiming waste from the environment to repurpose it, or about making sure that more people are healthy and safe from harm as a result of the company's actions. Next slide, Hannah. So it's easy to put up a couple of slides showing a list of 23 things. But what we've done over the last 5 years is we've curated and collated the best information out there from academic journals and other resources to come up with very detailed guidance on what this actually means for companies. So we have well over 500 pages of guidance in the form of a methodology guide, which explains the underlying system science and how the goals and the positive pursuits were created. Implementation guide around how to embed this within your organization, what the boundary for measurement is, and so on. And then for each of the break-even goals, an action guide with between 20 and 30 pages of guidance for each goal, saying here's how you actually measure progress towards this. And at the highest level, each one of the break-even goals, the progress can be measured as a simple percentage. So this is the kind of thing you can use as a dashboard to put in front of your executive team every quarter. Next one, please, Hannah. The final thing I'd like to say about this, 2 more clicks, please, Hannah, are that this is not death by questionnaire. A lot of ratings and rankings, really, the company does nothing all year with those mechanisms, and then once a year it has to fill in a very exhaustive survey and then send it off to an independent party, a rater, who will run it through their magic box methodology to tell the company what score it got. And that is quite frustrating for companies, often doesn't give them much actionable insight. We take the approach instead that you should treat your extra financial performance and data just as you do your financial performance and data. So you should be able to calculate your own performance throughout the year through self-assessment and actually factor that into your day-to-day decisions. And only if you wish to report on it publicly do you need to get that independently assured. And we've worked with Grant Thornton, one of the world's biggest auditors and assurance providers, to make sure that the future fit indicators can be independently assured against the ISA 3000 standard for non-financial disclosures. So it follows that same self-assessment and optional assurance model that people are already familiar with in finance teams. Next one, please, Hannah. Okay, so very quick, 2 more clicks. Yep. So basically, what we found working with our development council members and other companies and investors who've downloaded the benchmark over the last 3 or 4 years is this offers 3 things: a clear destination to aim for, a way to take better day-to-day decisions in pursuit of that destination to guide innovation decisions, and a tool for better engagement with customers, with investors, and others to show how who the real game changers are. Next click, please. And finally, what we've done is we've mapped both the break-even goals and the positive pursuits to the SDGs so that companies can see how they're contributing to the SDGs, both positively and consciously, and how they might be unintentionally undermining progress if they haven't yet reached the break-even goals. So this is a way to articulate SDG contributions in a holistic manner too. Next one, please, Hannah. Just very quickly to say, Novo Nordisk is about to publish its first Future Fit scorecard, which is had independently assured by Grant Thornton. Body Shop has set itself the ambition to be a truly sustainable business by 2040, and it's using Future Fit as a way to assess and report on progress towards that. Next one, please. Hermes, who's on our development council. So Hermes Investment Management, which is, I think they're way over $500 billion under management and advice right now, but they're using the benchmark in 2 ways: for their equity ownership services to improve their engagement framework, and also to look at the future fitness and the impact generated by one of their funds, an impact opportunities equity fund. We can go into questions on some of this stuff later, but let's race through this so we have time for discussion. Next one, please, Hannah. So one thing we've done is create what we call a health check, which will enable any business, another click please, Hannah, any business to figure out how to prioritize between these goals. One more click. So that it can figure out exactly where it should be paying attention and identify how well aligned that is with where it is paying attention. And this health check can actually be applied by people outside the organization based on the company's publicly available material. And in fact, we've got investment analysts now starting to use this as a way to spot whether companies are paying attention to the issues that really matter. Next one, please, Hannah. This is still in development, but what we're working on at the moment is standardized templates to enable companies to start reporting on their vulnerabilities and their opportunities, including contributions against the SDGs in a consistent, comparable way. Next one, please, Hannah. And finally, also looking from the investor side on how we take it a step further, so that while you can look at an individual company and look at its future fitness through that kind of health check lens, then looking at how you can aggregate this up over an entire portfolio, for example, to figure out where you want to spend your engagement efforts, or which organizations are most aligned or even misaligned with your fund objectives. So next one, please, Hannah. I think that's probably a good point to hand over to Chris. 2 more clicks. Just to summarize, Future Fit really is a management tool for business to drive better decisions and more effectively to the SDGs. It's relevant for the capital markets in the sense that this goes beyond looking at best practice within sectors and helps drive real meaningful progress. And it helps both sides spot where the real opportunities for growth and innovation lie, and helps people surface who the real game changers are. So with that, I'll hand over to Chris.
Great, thanks so much, Geoff. And apologies all for a little bit of audio challenge there, but looks like we've got it sorted out. And again, the slides and recording will be available. So apologies if there was difficulty on any of that explanation, but a big thank you to Geoff for giving us that framework for thinking at a systems level all the way down to a company level. And we will hand over to Chris to hear from the asset owner perspective what this means in terms of investing. And Chris, it looks like, yep, now you're off mute.
So, yeah, can you hear me now? Great, thanks. Yeah, thanks for having me. And so, LD pensions is a relatively small pension fund in Denmark. We've got about $5.5 billion US under management currently. 1.25 of those, 1.25 billion is in equities. And we're not a traditional pension fund because the only cash inflow that we've ever received was when the fund was initiated back in 1980. So this is we're quite different in that aspect. We are starting a new fund next year, which will be about 15 billion US. So that makes us like a bit bigger and more relevant. But we have the entire working population in Denmark as our members, which means we have no specific values or SRI concerns. I mean, I guess 20% of Danes smoke. We all drive petrol or diesel fueled cars. I guess people like to gamble in Denmark, and everyone likes a beer or a glass of wine. So that's why we don't have any. Our values must reflect everyone in our members pool, but I guess we can all agree on the UN Global Compact principles of human rights and labor rights and anti-corruption, and we can also agree on supporting the UN SDGs and the OECD guidelines for international companies, and like we don't like cluster munitions or atomic weapons and stuff. But that's our background. We're relying heavily on outsourcing. So we're a small investment team of 3 that focuses on strategy, including our responsible investment strategy, asset allocation, manager selection, and risk control. And because we rely on outsourcing and we use third-party asset managers as to invest on our behalf, we're quite distant from the companies, the underlying companies, but pretty close to our external fund managers. But we really started this because we saw a changing environment, a changing environment in terms of we saw ourselves as we needed to take more social responsibility in the way we invest. We could see a potential member engagement, like members pushbacks, for us to for the members to say to us, look, we need to invest our money in a more responsible manner. And we saw that legislation is coming in this area. So that's why we thought, let's update our responsible investment policy, but let's do it in a smart and impactful way, because what and what we thought was, look, just divesting from companies might not be the most impactful way to operate or to. I mean, if you divest, you lose the chance of engagement with the companies. You end up with high factor scores or factor risks, allocations to or misallocations. So divestment wasn't the best solution. Relying on third-party ESG ratings, like Geoff told us about, didn't make sense to us either, because they are, in our minds at least, flawed in a lot of ways. They're backward-looking. The rating agencies fill the gaps where companies fail to respond. The companies really hate the rating agencies because of the questionnaires, like Geoff said. So, and perhaps worst of all, there's no real investment correlation information available in ESG ratings. So why use like an ESG rating to tilt your portfolio away from towards the better rated companies when that rating in reality doesn't really make any meaningful impact, or that's the best case. Worst case is it doesn't make any sense at all. So what we found was allocating to positive projects might be a way to do to make things to invest impactful, and even better was perhaps to engage with companies to change their future behavior, to get the management and the boards to change their future behavior. So we really thought about where to make the most impact with the stuff that we've got, which was, again, small team, not a lot of internal resources, distant from the companies. But we still thought the engagement was the best tool for us. And in this process of thinking about how to make our new strategy, a responsible investment strategy, I met Geoff and Future Fit on a trip to London, and he presented this Future Fit framework for us, and that really instantly made sense to me. It really makes sense because it can help decision makers in companies take the better or the more sustainable future decisions, which to me at least is what really what drives impact. I mean, if companies can change their behaviors, that's the only thing that really matters. Me investing in some companies or divesting from other companies really doesn't make a change, I think. So we started to work on and to see how we could include Future Fit into everything that we do with responsible investing. So the first thing was to update our responsible investing objective, and to specifically state that we want to help all the companies that we invest in become more sustainable and act responsibly towards all stakeholders, including the environment and the society. That was the first step, and thinking about how to the next step was to think about how to get our message or our objectives through to the companies. In that process, we thought, hey, we're really far away from the companies. We can't go out and engage with the companies directly. Who we speak with our external fund managers, and we're close to our external fund managers. They themselves are close to the companies. Why don't we try and connect us to the companies via our external managers? So that's what we thought of. So we because the good thing about engaging with our external fund managers is it's that we've got easy access to them. They come to us. They always ask on what our view on ESG and what our view is on ESG when they visit. So it's an easy way to tell about what it is that we do and how we look at it and how Future Fit can fit. So what we then do was to get the board of managers, the board of directors, sorry, on our pension fund on board with this this thing of supporting the Future Fit, getting the message of Future Fit to the companies through our third-party managers, and by that making an impact on the companies and then to the society or the environment. So the board it was pretty easy to get that message through the board, and the board is flying into London to meet with Geoff and the team in August, and so that's good. And so the next step is then to incorporate Future Fit into everything that we do, and that will be asset allocation, manager selection, and engagement as well. And the way we do that is in a couple of ways. So first of all, the asset allocation. We've allocated a small portion of our equity portfolio towards environmental and climate equities right now. What we do is in the future, and we are working on this right now, is broadening the scope for this mandate to include or to link the investment universe of this mandate to the positive pursuits of Future Fit that Geoff talked about. So we really want to invest in companies who either create positive impact themselves, or amplify the positive impacts of others, or reduce the negative impacts of others, like Geoff talked about. So we are asking in this mandate and this mandate description that we will give to potential third-party asset managers, that you can only invest in companies that match the positive pursuits, where the companies have a primary purpose or primary product that fit one of the positive pursuits in the Future Fit positive pursuits. So we'll see how that goes. I think that's going to be very interesting to see the responses that we get from for this search. On our other manager selections, we will ask in the future. We'll ask for how the managers is aligned in terms of thinking about these things. Are they aligned in terms of thinking about the planetary boundaries? Are they aligned in terms of engaging with companies specifically on issues like the future fit? Are they willing to take the future fit benchmark to the companies in which they invest or engage with? That will be a key decision point in whether to select a manager in the future or not. And finally, the engagement part. We can help. We can help like increase the awareness of future fit by engaging or talking to our peers and the external managers that we meet about the way we see and how future fit sees the world, and what we and how we want things to look in the future. If we can increase awareness that way, I think that will make an impact as well. Finally, I think on the engagement side, we are thinking about potentially hiring an external engagement partner who can talk to companies directly about future fit. That would be pretty powerful as well, I think. So that's what we do currently. The next, and I'm thinking about doing, we've also joined will join the Future Fit Pioneer network of institutional investors to increase awareness of the Future Fit benchmarks. And I think from what I've heard about the portfolio assessments of that Geoff just talked about, I think that could potentially be a way of including or incorporating future fit even more into our future decision making. So
great.
All in all, I think it's fairly easy to I think it has been quite easy to incorporate the future fit benchmarks into our thinking. We thought because it really makes sense to just not to me, but to all our senior managers and our board of directors. So that's been easy, and I think it's you can really implement it across the entire organization and through our external managers as well. So that's at least how we've thought about creating an impact. So yeah, sorry.
No, thanks so much, Chris. I think it's really helpful to hear how you've gone through basically that whole roadmap or that whole process of initially thinking, how do we clarify one set of values when we have so many stakeholders? Here's a kind of universal level of defining that kind of overarching principle and using that tool throughout the way you speak to investment managers, the way you speak to the board, kind of across the board throughout your investing process, how you make that work by having, a defining principle and a framework around it. So I want to make sure we spend a little time on the questions. And I think Geoff and Chris, if you can keep your lines muted until you're answering, then we can go back and forth without too much of an echo. So we got a number of questions that were related, so might kick off with those around, and both of you alluded to this, kind of all the different kinds of standards and frameworks that exist out in the world. How does the Future Fit framework relate to them? So got questions about how is this similar to or aligned with SASB standards, with B Corp certification, with other frameworks like that, and particularly from a company perspective and an investor perspective, where does this fit?
Yeah, good question, and that's probably a whole other webinar in its own right. We're not trying to reinvent the wheel. The last thing the world needs is yet another tool that overlaps with everything else. So all we're trying to do is really set the line in the sand that will measure necessary progress toward a desired future state, rather than focus on questionnaire-based assessments of best practice relative to the unsustainable status quo. So GRI indicators, well, a lot of the data, if you're already collecting GRI data for a GRI report, will feed into the future fit indicators. SASB, we're perfectly aligned with. In fact, we're doing a project with them because if you think about it, future fit sets out the 23 goals every company needs to reach, no matter what its size or sector. And SASB, for 79 sectors, says here are the issues that are most material for investors within each sector. So if you marry the two, you get a future fit assessment that is weighted according to what's most material by sector. So it's actually a perfect fit. It's like two jigsaw pieces. B Corp is a once per year or once every 2 year questionnaire. And we like the B Corp stuff. It tends to be more for small companies. We work with them quite closely. A couple of our development council members are actually, so Eileen Fisher, for example, is a B Corp and is also pursuing future fitness. If you think of it like this with the B Corp, the journey to a sustainable future, you're going to encounter all sorts of terrain and unknowable things along the way. And for that kind of journey, you need two things. You need a vehicle which is up to the job and can cope with negotiating whatever terrain you come across. And that could be a B Corp. But you also need a sat nav. You need a way to steer towards that final destination. And that's what Future Fit is. So with all these things, there is there's a very strong alignment where we're either able to leverage data people are already gathering for those other things, or it's actually a very complementary fit, and Future Fit can be used alongside those things.
Great, that's really helpful. We also got a couple of questions around, thinking about how this applies to companies on the financial materiality of some of the future fit goals and framework, and how, we heard a little bit from Chris about what engagement on those issues looks like from an investor perspective, but if you could go into a little bit more detail on that as well.
Chris, do you want me to say a few words, or do you want to take that one?
You start off then, and I'll jump in maybe.
Okay, so I think the thing is here, you probably noticed in the presentation that I don't refer to non-financial issues, I refer to extra financial issues. And that's because in today's world, with the systemic risks and pressures facing business from the environmental side, societal side, and also disruptive technology, to think of these things as non-financial is missing the systemic risks and emerging opportunities in there. The health check is really key here, because the health check is about understanding which of these future fit goals are difficult for a company to hit, which of them could disrupt the business most if they're not hit, and which ones of them are coupled to the way the business makes money. So this is absolutely tied to the financial resilience of the business.
Yeah, and I think from an investor perspective, we like our managers to engage with the companies on both financial and non-financial risks and opportunities. It's like one of our criteria for selecting our managers is how well they integrate the non-financial risks and into their decision making and into their selection of stocks. We think the more they can engage with companies on the non-financial risks, the better it is, and that might lead to a better financial outcome in the future.
Great, thank you. And so I think what will be our last question is, we got a couple of questions along the same vein of who's been raising these sustainability issues and how can someone in an institutional environment who cares about these issues help persuade colleagues. You've again both touched on it a little bit, but if we could close with that thought, and then from a very practical standpoint, Geoff, if you can close with when some of that portfolio assessment information might be available and how people can stay in touch if they have further questions.
Sure. Do you want me to take that first?
Yeah.
How we did it, at least, was we presented the flaws of the readily available ESG data or CO2 emissions data that was out there, and we saw that that would be probably industry standard here in the Nordics to take those ESG ratings or CO2 emissions and tilt your portfolios towards the better rated companies. But presenting the flaws of that and comparing that to the future fit, the benefits of the future fit, I think that made sense for our board of directors and for our senior management. So that's why it was really easy for us to get that across. And I think the awareness of that pension funds needs to take responsibility and be part of the future solution was already there, at least in Denmark. So this was, I just needed the right tool or the right framework to get that across, which we found with the future fit.
Yeah, just to add to that, I think the one thing I would say is we've put a lot of effort into making this easily understandable for example, for non-exec board directors who don't have any expertise in this space. We've developed a future fit video crash course, which will tell you everything you need to know about how this relates to core business and systemic risks and so forth. That's going to be going live on our website within the next couple of months. We also have a changemaker community coming online in 3 weeks' time on the website, which is designed for exactly the kind of people that care about this stuff and want to get their leadership's attention for this stuff. So there's a lot of resources coming. There was a lot of resources now on futurefitbusiness.org, but a lot more coming soon. And as we mentioned, we have programs coming out to scale awareness and adoption of this, including the Future Fit Pioneers program that Chris mentioned. But all of our core resources are free to download. You don't even have to put in your username and email address on our website to be able to get at those. So anyone who wants to know more, you can find a lot of useful stuff there.
Wonderful. Thanks so much. Well, we're at time. Thank you all for the great questions, for the wonderful examples and framework. Again, this recording will be shared with participants and posted on the IEN website. So please do send us any other questions. I'm happy to follow up after the webinar, and please do share the recording with colleagues who may be interested in this framework. Thank you all again.
Thank you, Hannah. Thanks for hosting.